You love the investment part. You're a numbers guy, man. Like you love the things I've learned about you. You like your numbers, your oat lattes, and you're actually you're good at the old PowerPoint presentation. I can tell you that. They're very, very flash. Mate, there's a few key things, I guess, around the investment part. And you touched on it before about partners that you have for depreciation.
Yeah.
And, a couple of things I'd really love you to touch base on for our listeners is, well, there's depreciation and there's expenses, right? So let's break that down.
Yep.
What is, in a nutshell, depreciation, and how does that actually help with an investment strategy?
Before we get to that, I'll just say that, yes, I drink oat lattes or iced lattes, but you did order was it a skim flat white, 3/4 full or I don't know.
Maximum
something
coffee.
Ridiculous. So that's
maximum coffee, minimum milk.
But
if I wanted a milk-based drink, I'd just buy hot chocolate.
I think most people actually drink iced lattes, and oat milk's very popular now. Just anyway. I think so. Yeah, from an expenses depreciation side of things, and look, I love both sides, the investment and owner occ, but investment, it is numbers driven. I feel like that's I suppose a PowerPoint for me. So I love working with investors from that point of view and actually setting out their goals for the future. And we'll start off by saying this is not tax advice or financial advice in any way.
100%. This is not just general advice. People, go to your accountant and see a tax depreciation.
But what we can provide is some information to provide to the accountant around that, right? So we'll do up things like cash flow tables for them that we've developed out that covers essentially any cost or expense that will be incurred for that property.
Yep.
It covers every single line of those, right? And that could be things like your repayments and what you're paying back on the mortgage, which is obviously one of the bigger expenses. But you're looking at things like rates and water, insurance, if you've got body corp, if you're buying into a body corp, which is insanely expensive at the moment.
Like far out.
You're paying like over $4,000 for majority of the body corps in and around Brisbane at the moment. It's pretty crazy. But it's all of those expenses that you can then essentially claim back at tax time or offset your rent that you're getting. So the income essentially coming through on the property. And so those expenses will obviously offset that.
And why use a mortgage broker? This question comes up all the time, and I thought I'd debunk a few things and also give you a bit of an insight into what we do and how we do it in a way that you'll understand and could probably relate to. Now, some of you may or may not know that I do like Lord of the Rings and The Hobbit, so I'll try to tell a story in that sort of way of how we do it. So let's get into it. What does a mortgage broker do? Well, think about it this way. Imagine you're on a quest to find the ultimate treasure, and your journey is fraught with peril, hidden fees, confusing jargon, and the dreaded paperwork monster. It lurks around every corner, and then obviously things like delays and how do you manage that, and also your time, knowledge, and expertise. Is that the best place to be spending it on you doing your work for you? That's when someone like myself, a mortgage broker, sweeps in to save the day like a superhero. We not only do the research, find you the best deal, we've got access to over 40 different banks, lenders, their policies, their procedures. And we take all the hassle away from you. Kind of think of it like we're your Gandalf to your Frodo. On top of everything else that we do, we also negotiate the best deal for you. Now, there is a massive myth that I want to debunk that if you go directly to your bank, you're going to get a better rate. That's not true. The banks can't give you a better rate than what they can give a mortgage broker because, well, one, that's counterproductive to their business and it's not very competitive. So they're kind of blurring the lines between that anti-competition law as well. So we are there, we know the contacts in the banks, and we can really help and negotiate with the right language to get you the best deal for your current situation. Why use a mortgage broker? Like I've just mentioned all the reasons before, the key thing is the difference between us and the banks is that we actually have to act in your best interests. It's called best interest duties. When we're presenting you a strategy or a solution, It's based on your requirements, objectives.
Ticking along nicely over at Sandgate Football Club, the Hawks. We're going to look pretty strong across the board, I think. So, footy starts in a couple of weeks' time. So, good times.
Been doing a bit of pre-season.
I have. It's good to get off the office chair and get the body moving, as you know. It's good for everything.
Yeah, you're riding your bike a bit as well, a bit of cross training.
I
so you
am.
at the cafes in the morning.
Yeah. No, it's a great way to start the day, obviously. Get the body moving and the blood pumping. So, recently just bought myself and we've got a heap of bike paths around the place. So thought it'd be rude not to get myself a bike. So, really enjoying it, mate.
You don't have one of those baskets for your little miniature dog that
No.
you eventually get soon?
No, the partner does have a cruiser though, which is, it's great. Get out and do that,
Yeah, no batteries on that cruiser, can't catch on fire.
No, mate, no. She's completely human operated, powered.
Look, you just mentioned you bought your first place. How was that going? You all settled in?
Yeah, good, mate. Good. We settled in December and don't recommend. It's a very busy time of the year with, Christmas thrown in amongst that. So I think we settled a couple of weeks before Chrissy and just busy time of the year, but it's a bit of a construction site at the moment, doing some renovations, but no, it's really exciting to have my own place now with my partner Caitlin and be able to customize things and put things up on the wall and it's awesome
without people telling you where to put holes and stuff like that when you're renting,
exactly.
right?
Don't have to ask anyone. So
cool. And obviously, you're being a first-time buyer. You're in that space. What motivated you to become a broker, and why are you so passionate about the first-time buyer space?
Yeah, mate, I am very passionate in this space. As you know, there's not a lot of education around buying a home and financial literacy in general. It doesn't get taught in school. So, I am super passionate in that space. And, so I guess me jumping into the broker scene, I've been a broker for nearly 4 years now. And prior to that, I was in communications at a communications company. So I did a range of things, internet services for home businesses, did some contracting around Australia, which was awesome. And then also did some TV and security as well. So, I had some people within the industry in Brisbane in finance that I've known for a little bit of time. And I was coming to a bit of a crossroads with what I was doing. I worked on my own all the time and I enjoy being in the team environment and sort of working on your own gets a bit old after a while. And so I'd actually made the switch during COVID. So the pandemic sort of sparked that. The couple of people within the industry that I knew quite well said, if you're ever thinking of a career change, I think being a mortgage broker, be a great fit.
You're not converting to being a Brisbane Bronco fan?
No. I bleed blue. So when Origin, I remember when I first came to Brisbane and I started in.
Should we finish the podcast?
Yeah, I think we should finish the podcast.
I remember starting in business banking. I think we kicked off the first 8 years, Queensland winning every year. It was hard, but I sort of came in every year the same time, copped the same abuse from the people around Brisbane, but it's good fun. You get used to it after a while. That's what happens when you're a West Tigers fan too.
Toughens your skin for the insurance game,
Oh,
right?
it does. It does. It does.
Claims.
Yes. Yeah.
Good man. Darren, obviously you've got the accent going on.
I do.
So,
I'm an adopted Queenslander.
Oh, great.
I like to say
So
I'm
you can
adopted
stay.
Queenslander. Yeah, definitely. So I'm from the Queensland originally.
Yeah.
From London, but been here a long time. So I've been here 18 years.
Yeah.
Probably must say my wife's also beautiful because Emma's beautiful. So I got Gemma. Been married for 20 years this year.
Yeah. Shout out to Gemma.
Gem keeps us all ticking and moving. And I've got two kids as well. So I've got Flynn, who is, get this right, 9, mad basketball fan.
Oh, who's his team?
Well, he hasn't got a team. I'm not a basketball, I'd say guru. I've learned to love the game as Flynn's taken up basketball. I'm a Minnesota Timberwolves fan. I'm not a glory hunter. I appreciate they're having a great year this year. I'm trying to convince Flynn to follow me, but I think look, Steph Curry's, LeBron's of the world, they're taking down a different path. So that's basketball. And then
What about the Bullets?
Yes.
Members of the Bullets?
Yes.
Oh,
Not members. Went to a few games. Actually, anyone who hasn't
Basically
been
members.
to it, haven't been to a game, go. It's awesome.
Yeah, okay,
It
cool.
is awesome.
Cool.
I
Yeah, it's
recommend
good
it.
fun.
All right, park right outside, 4,000 people, max capacity, good vibe, good atmosphere.
They shoot the shirts into the crowd.
Shoot the shirts. It's good. It's a good day out. And then Megan. So Megan is 12 this month. 12 this month.
Yeah, turning 21.
We've got a little bit of attitudes coming through. She may see this podcast, but no, she's a lovely kid. She's all netball, loves her netball. She's a real sport Billy. Anything sport she loves. So similar to you guys, probably I'm a dad taxi on the weekend.
Yep.
That's my life at the moment. And then obviously we thought we'd start a business to keep ourselves interested as well.
Well, why not? Why not? Hey, heard that you had a really weird fear. What's your weird fear? Well, not weird, but it is a fear.
You know,
Right?
so for anyone, this is 2nd of May whilst we record this. There was an incident in a tunnel yesterday in Brisbane, a legacy tunnel, and my fear is tunnels. I will happily drive 3 hours out of my way to avoid a tunnel. The Channel Express tunnel from Dover to Paris is my worst nightmare in the world. So my fear is tunnels.
What are your top tips when it comes to purchasing a property, commercial, or refinancing, or just going through your line of work?
So one of the top tips I would say, just as you raised before, is you need to get in early. So find your key people that you'll be using for the transaction, your mortgage broker, your solicitor. In terms of contacting your solicitor, you'll want to get in very early when you start looking to purchase. You can have that early discussion about what your offer might look like. So we can guide you with what special conditions you might want to put forward, what your settlement timeframes might be. You might have a complicated situation. You might need a purchasing entity set up. You might need some structuring advice. So yeah, especially having the right purchasing entity is very important when buying property. So if you get in early and get that key advice, that will make the transaction smooth.
Yeah, I will 100% back that. The reason being is a lot of my clients at the moment are putting down contracts with their name and then having a special clause in there to change when they get the entity. And my question
That's a big
is,
no-no.
yeah, oh right, okay,
That's a duty implication there. So there was there was
tell me
there
what
was
the
a
hell?
relevant there was a recent ruling. Basically, if you put down, or in Queensland, let's talk about Queensland specific, you put your personal name down to purchase, you're actually purchasing through a company, but you haven't yet established that entity. If you have a special condition which it is allowing the buyer to rescind the contract and enter into a new contract with that new entity once it's created. The Office of State Revenue have actually considered that to be a satisfaction of a condition, which means you're satisfying the contract, which means there's a duty implication. So duty arises on the agreement to purchase property. So usually due within 30 days of the contract date or 30 days from satisfaction of conditions. But yeah, that's a big no-no these days. It's a very recent ruling where basically the Office of State Revenue have said, don't put that nominee replacement purchaser kind of condition in your contract because you could incur double
you
duty.
can see on my face right now, because I've literally had about 3 or 4 of these contracts that they didn't have it set up. I've always said, set your entities up, go speak to your accountant.
Yeah.
Wow. Okay. Right. Really want to talk about a couple of things that are pertinent in lending. So having a look at your current situation, is your investment portfolio a well-oiled machine or is it a ticking time bomb? Today, what I'm going to talk about is around the investment portfolio and the structuring. Trust me, it sounds drier than a week-old sandwich, but it's really, really crucial that we actually get this right in order to build your financial legacy over generations, right? So why is structuring your portfolio so important? Well, imagine this. You're building a house, right? You're not going to start by picking the curtains first. You're going to need to have a solid foundation before building up. The same goes for your investments and your and your lending and finance. So without the right structures, what you might find yourself hitting is some serious roadblocks as you grow your wealth and grow your portfolio. So what happens if you don't structure your investments properly? Cool. Good question. Think of it this way. You are buying a property in your personal name for too long. It's kind of like trying to squeeze your family of 4 into a 2-seater car, right? Eventually, you're going to run out of space and you're just going to pop out the sides. Or in financial terms, you're going to hit serviceability barriers. On the flip side, you are jumping into trust structures way too early. That's probably going to hinder your cash flow, and it'll probably mean that you can't, take holidays and things like that. And you won't be able to also claim a few benefits that you can in your personal name. So, as the old saying goes, if you fail to plan, you plan to fail. Without a clear investment strategy, you might end up having a mismatch and inefficient portfolio that stops you from growing generational wealth. Good, some lenders prefer, depending on the type of lending you're doing, 700 plus. But again, there's enough mitigants there to go around. But yeah.
But anything sort of under that, let's say 600 mark,
Yep.
is when it gets a bit scary for finance.
Correct.
And in terms of how those algorithms work and what you need to be careful of, each time you shop around for finance, it plants an inquiry.
Yep.
Personal loan, credit card, car loan, short-term loan, buy now, pay later accounts,
Yep.
which I know that we definitely need to touch on.
Yes.
Each inquiry affects your credit score by 50 to 150 points,
Okay.
which is huge, right?
Yep.
Because realistically, you only have sort of 1,200 points every 5 years because those inquiries last 5 years as well.
Yeah, okay. Because I had one of my clients, which I, funnily enough, sent to you guys, and he actually had a really good experience going through.
Yeah,
He's been applying. They'd had a lot of applications for credit, but it was the
Yeah.
same application number just being pushed through. So he had 5 on the same, and that's why their credit score was. I mean, there's other stuff on there, but
Yeah.
it was 5. And he goes, I wasn't even buying a car. I didn't even know this was happening.
Yeah, that is changing in the industry. Soon we will be able to shop around more, and lenders will accept it doesn't stamp it like what's it called, an access seeker.
Yep.
But at the moment, every time a client shops around and ticks that privacy consent,
Yep.
it can sort of create or I guess bring that score down by 50 or 150. With your client though that had the 5 inquiries, if there's double ups and errors, we can get those removed.
Yep. Okay.
And that would instantly bring the score up. Which
By about 50 to 100 points,
yeah,
basically.
yeah, roughly.
per-
Again, it depends on those algorithms.
Yeah.
Each credit report individually is different. So inquiries affect the score. Then we also have the repayment history information.
Yes, because
now.
that's really changed. That's one of the big changes, the comprehensive credit reporting that's come in. A lot of the major banks have signed on to it. The major credit card institutions have signed on to it. Not everyone's on it. But yeah, that's
changed the industry,
it's
hasn't
changed
it?
the industry. And you've got open banking coming up soon as well. So there's really no, Heidi, you've got to have your affairs in order, right?
Everything now is basically your credit report, as you said
Yeah.
before, is first.
Yeah.
That needs to look amazing and have a great credit score for finance. So then we've got the late payments. So RHI for most of those debts is reported the last 24 months.
Yeah.
You have a grace period of 14 days, but you need to communicate with the creditor in terms of that grace period. And also if it's going to be late, then you have a couple of late payments. That's also going to affect
Yeah.
the score.
At Emerge, we actually have our superstars in the back office that review your rates or review all our clients' rates every 6 months, so they don't have to. This provides us with a great talking point around any changes in circumstances or what's next, because we could do what's next week, rather than 12 months, bring it forward if that's what they want to do. We also perform valuations where required to see whether the properties are performing. Hand this information also to the key parties like the accountant and financial planner to ensure that their strategy is still aligning or whether we need to make a change. So, the role of a financial strategist and your accountants and financial planners is really key because we all help you navigate those complex financial landscapes. There's absolute benefit in having a team of experts around you, such as accountants, financial planners, mortgage planners / financial strategists like myself, real estate agents and insurance experts to guide you along that journey and provide you with that independent, unbiased advice. So in summary, get in early, speak to someone early, surround yourselves with the right people. All right, that is so key. Get the team around you to ensure that you're getting that right advice. We're all working together as well. It's not one person working independently and not on board with ultimately your strategy and what you're looking to do. The other key point, get your finances reviewed regularly. If, let's say, your mortgage broker or financial strategist is not doing that regularly and you're having to do that by yourself, maybe have a think about whether they're the right people for you. I also really encourage you as my listeners to think about creating your own financial legacy and what you want for what you want that to look like. Reach out to me. Happy to have a chat, and I'm really happy to help you talk about building your financial legacy. Now, Scott, were you on the block, or did you go have a look? Are you near where they did one of the seasons of the block?
Yeah, we were. So because from where my house was, so we were in Hampton East, which was where the block was. Yeah, so we were walking around it. Did I send you a photo from where we were at?
Oh no, Phil was telling me about it when we first caught up, and he's like, "Oh, he's at the block." I'm going,
"Yeah." So so Andrew Date from Industry Insider, love you, Andy, helped us with our purchase in Hampton East.
Yeah.
And it was so interesting going through that professional relationship so it's usually we're on the other side. So we are delivering a service. It was quite nice to be on the other end of being, Andy helping us to buy a house and going through that process of, God, where do we start? This is so competitive and everyone else is sort of outbidding us and, dealing with cash buyers and just not being aware of just how the property market works at all from our world because, financial services, it's super regulated. It's pretty slow. It's really clear. And seeing real estate agents texting each other offers backwards and forwards was just a wild perspective from my end going, are you kidding? Are we making offers over text message considering like how much documentation that we need to be making to make any type of
like the scroll of documents, sign here, blood.
Are you sure about it? Take some time, make sure this isn't a fast process. So so having Andrew help us out through that process was great, and he had a contact. So we went a few times as the block was being built, and then the most interesting one was they did I think it was friends and family. So it was just like all the houses were ready to be sold, and it was like exclusive to like friends and family that came through, and sort of we went through each house and went through it, and just people watching. People they weren't sure whether they were supposed to be completely dressed up or not. So there was people in literal ball gowns.
Right. Yeah.
I don't know if we're supposed to say this, but that was. There was like full on ball gowns and like they'll look like they're going to like the horse races and some people who just come straight from work. And it was like...
Complete your own budget. It's simple. It's your due diligence on health check on yourself. Check your credit file. Guys, it's free. Just refer back to the podcast again with Kerry, where we discuss the importance of all this and how to actually check your credit file. The first time you don't get a second crack, usually. I work for you. I don't work for the banks, so I take the best interest for you and what your goals and requirements are. I also have a very, very strong group of trusted advisors to help. As I mentioned before, solicitors, build and pest inspectors, insurance brokers as well. The benefits of working with a team of experts is invaluable. They give you that independent, unbiased advice. when you've got that, I also work with buyers agents and real estate agents that can help you look for that property. After all, they are experts in their field, and we all work together to help you. So in conclusion, guys, let's recap a couple of points. And look, let me recap the importance of making an informed decision. I really, really encourage you, especially if you're a first-time buyer, or even if you're a second-time buyer, seek professional advice to avoid any of those common pitfalls. If you're a first-time buyer, I've got the perfect podcast for you. I did one with Luke Ashby, who loves this first-home buyer space. He's another finance specialist at Emerge. I work very closely with him. Refer back to that podcast. We go into more detail around the first home benefits available for the first-home buyers. This was at the time before all the changes happened. Now there are more benefits, so refer back to Luke. Let's have a conversation. Refer back to me. Let's have a conversation. I encourage you all, if you're thinking about purchasing a property, your first, second, third, call me. Let's have a conversation. Let's get you on the front foot on your home buying journey and building your financial legacy as well. You must get, so I think 2 weeks ago, I asked you about this for another client of mine, properties and trust, properties and super, things like that,
Yeah.
SMSF. Is there any is there really any protection for people that have got properties and trusts?
Short answer is no.
Yeah. Okay. Yep.
No.
There you go. Doesn't protect you. You heard it here, right? Finances, property, that podcast. Doesn't matter if your property's in a trust. It still doesn't protect you from the property pool.
I won't bore you with all the legal case law that tells us about that. Short answer is it comes down to control.
Yeah.
So who's actually controlling the assets within the trust? And 99% of the time, it's husband and wife, husband or wife.
Yeah.
Yeah.
Yeah, whether they be individual trustees or directors of the corporate trustee,
Exactly.
It's still related. It's still the control. It's still in the pool. It's not a third party, in other words.
One of the terms that comes up in the judgments, which is what the judges write, is that trust a mere puppet of the person?
Yeah, it's just a vehicle that they're driving to better protect their assets or,
Exactly.
Yeah, okay. There you go. What other quirky things have you seen that people think that they're not protected from? Like trust is one of them. Is there anything else they think that, oh no, well that's not part of it, or
cash in boxes, literally under beds, buried in backyards, given to
you've had
family
a client
members.
that's buried money in their backyard?
Yes, and then asked
Pablo
me,
Escobar or something, right?
yeah, and then asked me if it is has to be disclosed. It has to be disclosed. Is the short answer?
Yeah. So you can't hide things.
No, you can't hide things.
Yeah. Wow. Well, I got to ask. Hang on. Was it in a barrel? Like how was it buried in the backyard? Hopefully it was preserved.
No, in like a tin box.
Oh, like a safety deposit box that
Yeah.
you see.
And dug up dirt in the backyard. Yeah.
Oh, that's crazy.
Yeah.
All I'm picturing is the episode from Narcos when they Pablo Escobar put his cash in the barrels and all the rats came in and ate it all and they decomposed it. So that's all I'm picturing right now. That's crazy. What other stuff like assets, things like cars and things like I think you was talking about a car
the Porsche,
or something. The
Porsche.
Porsche.
I've got an issue. Porsches don't seem like a great financial investment. No, it's not financial advice, by the way.
No, it's not. None of this is financial or legal advice, anyone. We'll get to that later. Why is borrowing capacity crucial for investment success? Well, think of your borrowing capacity as like your financial fuel tank. Yes, I know petrol's expensive right now, but get away from that. The more capacity you have, the further you can go with investments. It's really essential for seizing opportunities and building wealth efficiently. So let's take a little bit of a moment to understand how how borrowing capacity works and what actually affects your borrowing capacity. The number one thing that it will affect your borrowing capacity, apart from income, is your credit score. Nothing else matters. If you are making too many applications for credit and have bad conduct, the lenders usually will look at that first. So as soon as we submit it, it goes through that, regardless of how much money you earn or the deposit you have. Again, I really encourage you to refer to my podcast with Kerry Sainsbury from Credit Success, where we delve a little bit deeper into how this actually affects applications for credit. The other defining factors that influence borrowing capacity is obviously your income. How much money do you earn and how much money will you earn, and where does that income come from? The other one is around your liabilities, your current mortgages, credit cards, your buy now, pay later. That really does affect borrowing capacity. Also, security to a certain point, where you buy and what you buy, because certain areas require more deposit, and also you can't buy in certain areas either. So what are some strategies around maximizing your borrowing capacity? Well, like I said before, maintaining a healthy credit score, paying your bills on time, not making unnecessary applications for credit, and reducing the debt that you have. Back in my banking days, I used to set a lot of these accounts up, for people to transact on, and one of the main reasons what they were saying that they wanted to do and I didn't really understand it back then, was around the super funds are just costing me fees, and it's not performing, and I'm going, okay, but you're just putting all the money into an account. But I didn't understand the back when you were learning learning that.
I think so. So if you look at sort of from a historical perspective, the self-managed super fund has been around, I think I might be wrong, but late 70s, something like that. The concept of managed retirement savings, or super guarantee as we know, was 91, 92. That's when that was put in place. But the concept of self-managed super fund existed before that. And it was really, you take total control, and then we've sort of had this expansion, compression, and expansion of different types of options. Sort of say the industry funds, we were in this seminar recently where they were saying ART and Oz Super are nearly 20% of the total market of those two super funds have nearly 20% of the entire population in them. So there's two gigantic monsters here. And there's also some other options around what we often will work with clients, which we refer to as wrap accounts, which does pretty much everything you need. You've got direct share access, you've got overseas direct share access, you've got cash, term deposits, et cetera, within these wrap accounts. And so if we go sort of from size, you've got the industry funds here, you've got the wrapper funds here, and then you've got the self-managed super fund here. And the self-managed super fund will allow you to do pretty much anything when it comes to a type of asset you want to buy. So if you want to buy, and this was one that we saw, which was kind of a bit crazy, but if you want to buy a property in the US, you can do it with a self-managed super fund. If you want to buy antiques or classic cars with lots of asterisks, you can. You can buy artwork, but you're not allowed to enjoy it.
Yeah, don't look at it. Yeah.
Walk around with a blindfold on.
So the summary is just, that's a tough one to do. But in terms of collectibles, music, you can buy patents. There's a lot of options you can. What else? Royalties. You can buy royalties as well. So if you can buy water right royalties, that's a thing that comes out. So the Murray-Darling Basin. So people coming through New South Wales. Then down in Victoria, there's water rights that you can buy and sell and trade. There's just a huge amount of stuff that is an investable asset that you can then put inside a self-managed super fund.
Far out.
Yeah. It's pretty wild.
Yeah.
You literally are ripping the guardrails off, and that can be a great thing. It can also be a massive risk.
In doing that, there's a lot of paperwork that, because we're dealing with banks and lenders, right? They need to tick the boxes and Consumer Credit Protection Acts and all sorts of things. So
and they all bloody do different things.
Yeah, correct.
All different documents. Why can't we just have one form or application process for every? You're all asking the same question.
Correct. Yeah, and we probably won't solve that today. But it's something that we can hope to be.
I know it's a conversation. I know Linda and I had that same. I think a couple of weeks ago. Oh my gosh, it's this one and this one. Why can't we just have one? But
and look,
you're right.
we don't want clients to even have to worry about that side of things. So that's what our team is so good at, our goal is to make it really seamless. And, you know, some of the best Google reviews that I love receiving and reading from our clients is that they say, hey, the Emerge team just made it so easy. Like there's lots of other parts of the process that are stressful, you know, dealing with other third parties and, you know, finding the property and negotiating and all of that sort of stuff, coming up with deposits and things. But, you know, I love when we see the response or the review saying, hey, these guys made it really easy. And it was just so they stepped me through the whole process, because, you know, we sometimes forget that, you know, you and I are dealing with this day in, day out, but most clients are only buying every 5 to 7 years. So, you know, if you're not in the industry and you're not doing it all the time, of course you're not going to know the whole process, and nor should we expect clients to. So I think a lot of the stuff that we do, and, you know, we're always continually trying to improve our process and learn about how to be better as brokers and as a business and dealing with clients. But, you know, always, you know, probably sick of me ramping on about it, but, you know, let's go back and go back into the client's shoes and say, well, what could we have done that would have made this transaction better or easier for the client? And so, you know, we're constantly evolving, but, you know, we're definitely getting there.
And I think, you know, by doing that, you're seeing that in your Google reviews, right? You just mentioned that, and constantly evolving. How do we change it? Look, if that process didn't work, well, what do we need to do? Do we need to change it? Do we need to not change it or do it better? Like that more, better, different, less, right?
Correct.
So I think that's a sign of a good, I guess, leader as well. Like, you know, let's call a spade, right? Like you growing the business, you're actually, you know, you are the leader, and people do actually look up to you. You know, I'm in awe of what you've done, because I've just gone, shit, I should have done that 5 years ago. But you'll see a lot of brokers that, I mean, we've seen it. We've had this conversation with Marcus, right? Like he's come in and goes, oh, I don't want to be a broker. You know, I don't have the confidence. But, you know, what I've seen is we've given him an opportunity, or you've given him an opportunity to go, hey, how about we build some confidence?
Yeah.
For these clients, definitely what they were looking to do, they probably, I kind of said they outgrew their bank. So, you know, you've got one property, great, no worries, you may be able to go there. But if you're looking to do more and you want to grow your wealth and grow that generational wealth that you can pass down to your family, etc., I think you need to see a mortgage broker earlier so we can actually set you up. What this conversation had for the client was now they're in a position to purchase their next property, but we've also set them up to purchase potentially another one off the back of that. And we've built a relationship. I've also managed to link them up with my greater network. I think this is the power of going through a broker, because they've got a massive network of industry professionals that will be able to give advice in their fields. So I've referred them to one of my accountants who's giving them tax and structure advice. One of my solicitors, actually shout out to Natalie from JHK Legal, I've referred them through to you because they're going to give them that advice on, hey, is this contract done up correctly? Give them, hey, you know, you should be able to look at these special conditions, get that contract piece right so they know what they're signing before, and a smooth settlement. When they finish if they do their build, or if they're buying an investment property, I've referred them on to a person that will do depreciation schedule, because that helps with the overall tax strategy as well. Build and pest inspector, I've given them that as well, if they're buying an existing property. And also for the wife, we've referred them on to one of my clients has a beauty therapy business, and she may want a massage down the track. So very diverse. It's not only about finance. I've got other people I deal with as well. So that has now created an ecosystem where we've given them the platform to thrive. On top of that, they're going to be looked after by my team at Emerge. Every 6 months, their rates are reviewed. They don't have to go do that. We're making sure their investment is optimized, their cash flow is maximized. Therefore, at the end of the day, they're creating their financial legacy that's going to last for generations, and we're helping them support that. Kudos to your team, man. Like I really do enjoy working with her because it's just simple, easy, and I don't, you know, nothing's ever a problem until it is a problem.
Yeah.
But yeah, like you're right. people look at a site and I sometimes feel they just see dollar signs. I try to slow them down. And then when it comes in like, you're great because you're also my second handbrake. Because it's the question. Have you engaged someone to see whether this site is good, or are you just going off what realestate.com blurb is, or just going off what your friend who's not in the market is? And
yeah. It's a really interesting space, and the phone call I dread is the classic, I've just secured the site on the weekend at an auction and I've got it for a steal. And and it's like, whoa, slow down, because buddy. I can just see there's you know the classic example. I wasn't really interested in the property, and it seemed obscenely cheap, so I bought it. And you go, right, okay. So anyway, and then you find that there's all sorts of hairs on it, and it's really important to understand what you're buying, or the project that you want to get involved in. Because there's no easy sites anymore, Dion. I'll tell you that right now. Some sites are easier than others, but there's no easy sites. And it's really important that you dig and you dig and dig and understand the project.
Yeah, and I guess, there's a couple that I've sent over to you because I've looked at one and I've just gone, oof, that's way too good to be true. They're asking quite a bit of money for that, but what's actually in it? And, that's where you as the expert in finance, but I know enough about what goes on in the back end on a development, not the expert by any means, but when I look at it and I see the photo on realestate.com and it's got two land, like it's already split into two, I'm going, and then you read it and it's got DA subject, and then you got the abbreviation subject to council approval, going, if it was that easy, you probably would have done it yourself, but it's not, or at least you would have got a DA to be able to do it yourself. Maybe ran out of money. But I know some of the sites that I've sent to you, you're just like, nah, that's actually going to cost you quite a bit of money. You might, and that's really the gist of it. And probably potentially save clients hundreds and thousands, if not millions of dollars, right? Making the wrong purchase, because you could purchase it for all what it says versus what it can actually do. Two different things. What is a rooming house? Why are they different?
Yep.
And bust a few myths. Yep. Because I think you can demystify a couple of things that the same questions, right? Cool. All right. So before we get started, Harry, tell us a little bit about you, what your background is, and how have you got to where you are right now?
Yeah. I've been in property sales for a very long time. I've been in property my whole life. I started out in the trade side and eventually became an architect. Worked for a little bit in that space, a bit of project management, and just found that my natural space was dealing with clients. And so I've forgone a lot of that consultancy, and I'm predominantly sales.
Yep.
So we do a lot of work with, at the moment, assets that have leases. So rooming houses are excellent. Commercial properties have their benefits. But what got us into rooming is it's a sort of a quasi-residential product. So it's accessible. Its price point is really great.
Yep.
They're not complicated to build.
Yep.
And they've become easier and easier to get certified and approved over time. So
and we'll get into more of that as we go along. We can't give all the secrets right at the beginning, right? You've got to keep everyone. So you've got a young. I think every time I ring you, there's someone crying in the background.
Yeah,
little girl.
Yep.
Yeah. How old?
She's one. She just turned one a couple of weeks ago.
Yep.
Georgia's fantastic. A lot of fun.
Tell us a little bit about you, your background, couple of hobbies, and something that no one knows, so that we can tell the world.
Well, I'm actually not that good a surfer. I'm okay, but not that good. So whoever's told you I was a great surfer is lying.
I just made it up.
Fantastic.
But surfing, right? So what got you into surfing?
What got me into surfing was I was young, like maybe 14, 15, and some of my friends were doing it, and it looked super cool, and I wanted to sort of be like them, and I realized that it's a really, really difficult sport.
Where's your local spot? Or can't you give that? Is that like a surfing secret?
Look, my local spot at the moment is probably at the Curramundi Lake up at the Sunshine Coast.
A lake?
It's at the front of the lake. So the lake goes onto the beach.
Oh,
Yeah.
Okay. Yeah, I don't like the ocean, so I'm not a big ocean person. I'll put my feet in there and maybe lay in the sand, but that's about as far as I get. But yeah, so is surfing like your hobby sort of outside? Is that why you got into it as well, or kept going with it?
Yeah, it's something that I've found for me has given me a lot of grounding and peace. By nature, I'm someone, a bit skittish, sort of always off thinking and very much in the mind, busy, and doing that is really the opposite of that. It's slow, grounding, in nature, patience, waiting for a wave to come, that type of thing.
Yep, a lot of thinking time out there.
A lot of thinking time.
Yeah, I saw the surfing finals in the Olympics.
Oh, yeah.
The Australian guys is there. And like, man, they're out there for like 30 minutes and is 15 minutes in, there's not even one wave. I'm like, what the hell are you guys doing?
Yeah.
But then,
happens all the time.
Yeah.
All the time. You're going to be sitting out there for half an hour and not get a wave. Yeah.
Have you been, what's your favourite surf spot?
Look, I really love the Maldives. There's a wave called Sultans at the Maldives, which is probably my favourite. Cool. I've had a couple of really great days out there with friends, and etched in my memories as just epic. 10 out of 10 days.
Nice. So that's your go-to trip if you have a chance.
Yeah. Sometimes I go to Indonesia, but the waves in Indonesia are a little bit more scary, and reefs are a bit more shallow and sharp, and so Maldives is a little bit softer.
Yeah, fair enough.
Yeah.
Yes, and back to the contingencies and the feasibility, that's one of the things not no one. Like there's a lot of that stuff missing. Like what's the fallback plan? Like that could be your build price. I'm always building. I normally do 5 to 7.5, depending on the type of build. Like I'm not a builder, right? Like, but I know that a funder will build that in automatically.
Yep.
So I'm playing like 2 steps ahead, and it's really important. Because you don't know, and that also covers your backside for variations a little bit too, right? And overall profit at the end, if you're going to sell it, overall profit at the end, making sure you don't go over budgets and things like that.
You don't know what you don't know. You start to do a job, you've had a couple of soil tests, there's a couple of test holes being done, and by the time you actually do your site works and site excavation, the next thing you find is a water, there's a spring in a corner. Or you find
swimming pool?
No, just a constant water source in a corner, which is some sort of underground water source, and then you've got to spend a lot of time to try and actually, and time is money,
not oil,
and you got to try and cap that leak.
Sounds like the intro to the Beverly Hillbillies. Right? They've sprung oil.
Sprung oil, yeah. That'd be preferable, but. Yeah, it's not Evian.
No, damn it. You can't turn it into a water feature.
No, the other one is when you're doing your knockdown rebuilds, when you come in and you demolish a house and get rid of it and the site's cleared, and you start digging your footings and you realise then that 600 down there's buried asbestos from the previous renovation that was done, 30 years earlier.
Well, I think it's better than a snake's nest.
Yeah.
I don't know. I got it in there.
At least asbestos will kill you in 20 years, you know what I mean?
Yeah, true.
A snake will kill me now. Just a heart attack.
Up to 23 young per snake.
23
in one.
Oh, no. Pass. Yeah, I'm with Henry. I don't like snakes either. I have another follower question that people wanted answered. So it's come up a few times, right? Topic today is self-employed customers. Here's how to get your loan approved that you guys deserve. And I'm going to debunk a few myths, right? Banks like self-employed. It's okay to be self-employed. But what I want to cover off today are a few key points. Really want to give you guys an understanding of a lender's perspective around self-employed income, right? How they calculate it, why they calculate it, etc. Then give you guys some hints and tips about documents that you may need and how we get the right documents and how you get the right income. Cool? Lastly, want to talk to you guys around lender choice. There are a lot of lenders and they all do different things, and why I'm good at self-employed right? Cool. So let's get into it. Let's bust this myth. I want to clear it up right now. Banks do like self-employed clients. They do want to do business with self-employed clients. There are a lot of banks out there that love self-employed clients and actually have some fantastic policies for self-employed clients. Will it fit you? I don't know. That's why you need to come and see me and we can have a chat about it. So let's take a minute to understand why that myth has happened and understanding a lender's perspective, I guess, around why some may see self-employed as risky, right? Cool. So like I said, lenders love self-employed, or they like self-employed. However, self-employed, like casual income or overtime and allowances, right, is not consistent usually. So why the myth has come about is because some businesses will have very good years, some won't, and it fluctuates. What a lender really wants to see is consistency, right? Usually a lender will want you to be 2 years ABN or ACN self-employed and have 2 years worth of financials because they want to see consistency. They want to see the variations, but they also understand that if you're a new business in your first year, you may have a few extra costs. That's why you have the 2 years. And they just needed to speak to both solicitors to do it.
And the other broker didn't even bring that up.
They
or didn't even
brought
ask
it
the
up, but they
question?
just said the funder can't do it because of this. But all we did was remove the clause on the contract, and the funder did it.
Wow.
Well, not like there's other stuff.
Yeah.
But
Yeah.
that was the main issue that they were having. They would have had that settled weeks and weeks ago. But that's right. Now he's a client for life.
Yeah.
Right. They're so appreciative.
Yeah, and he will spruik your praises.
Correct.
Till the
And,
end of days.
He's in a very good.
Cut to a scene of you standing on a rock with a sword with everyone gleaming up at you.
Yeah, well, I'm sure there's an AI image for that.
Yeah.
We'll find one.
ChatGPT will do
Yeah,
one.
we'll find one.
Yeah. But, this just goes to show when you're looking at, like I specialize in the stuff that people can't get approved, like, complex,
Yep.
self-employed, that, you've got a problem. And I usually get people come to me when they've already seen another broker, they can't do it. And then all of a sudden I'm doing it. They're like, what? I'm like, I don't have any other rules.
Yeah.
Yeah.
I just understand I just understand it better.
Yep.
Yeah.
And I'm very upfront with you. Like, I can do it or I can't. You get me the information to determine whether I can or can't do it.
Yeah.
But I can't do it without all the information.
Yeah.
It's just like you putting a podcast and going, I can do the podcast.
What's
but
it about? We don't know. We'll sit in the chair and we'll
I'm
hope
just
for the
gonna
best.
talk.
Just going to wing it.
Yeah. Well, I wing most of my podcasts.
Do you have any guesses? No, I'm just going to talk to myself for 20 minutes and see if something magical happens.
Yeah, I'm just going to put B1, B2 over there. Yeah, they won't talk, but you can do voiceovers, can't you? But like it is. You just got to be back to that organisation piece.
Yeah.
Be organised. Help people help you. I don't think there's not a solution for a self-employed client.
Yeah.
There are certain things that are outside of
Can we
self-employed.
say that as saying, don't be the shoebox in life?
Don't be the shoebox. If there's one thing you take away from me, don't be the shoebox.
Don't be the shoebox.
But you look at it going, people can only help you as much as you help yourself.
Yeah.
That's one thing I try
That's
to
true.
instill, right? You can't just hit
What's
hope
the
all
old
time.
saying? Is it you can lead a horse to water, but you can't make him drink?
You can if you make them thirsty enough, they're going to drink the water, right?
Yeah, just start
So-
splashing in their face.
Yeah,
It's
but-
here for you. Take it.
Yeah, but
I don't want it.
You gotta have your own drive and motivation to do it. So it depends on the strategy that you do. You can't just go and put a rooming house on any block of land, right? It's got to be in a council area that approves rooming houses, and each council has restrictions. And if you're not in that space, you're probably going to purchase the property without doing due diligence. Again, this is why it's really important to have that team of experts behind you in order to do that for you. So if that's what you are looking to do, don't go buy anything. Come and see me first, and I'll be able to guide you in that direction on who to speak to, and based on your goals and what you're looking to do. So there are pros and cons to both. And I guess the biggest pro is if you build, you kind of get the uplift in the value. If you are buying existing, well, someone's already developed that, and you're probably paying the uplift on the development as well, which is not a problem. You do that with normal houses anyway. So it's got
have a different mindset. So financing it. This is the $1 million question, and it is not a blanket one size fits all, and it is not an investment that anyone and everyone can do. Cool. I want to make it very clear that to do one of these, you need to have the correct debt structure and strategy. And more importantly, you need to have a debt structure and finance strategist specialist like myself guiding you through this process. Now, you've got an option to go slow, to go fast, or if you want to speed through it, you can as well. My methodology, go slow to go fast, because the better we can understand your debt structure and strategy, where it all sits, it will actually end up being better for you, optimizing your yields, maximizing your cash flow. And actually, some clients that I've spoken to have come to me with the vision of, I can only do one, I can only have affordability for one. But after looking at everything they have, making a few adjustments, speaking to their existing trusted advisors, e.g. accountants and solicitors, we've been able to help them not only get one, but one of my clients has gotten to 4 in the last 6 months. It is just about debt structure and strategy.
I've had people for years waiting for the right time to be buying, and all that's happened is their borrowing capacity's come down and prices have gone up and their savings have got eroded. Yeah. So tell me how waiting's going for you. So waiting's not a strategy that we endorse, that I encourage. I'm like, you buy what you can, when you can, where you can. You buy quality over quantity. And as an investor, you're now looking at the right opportunities. And you might have a little bit of negative cash flow still that rates are high, but once you start to see rates come down a little bit, you said, what's the right structure? Yeah, take the time to get things right. Are you buying through a trust? Are you buying through a self-managed super fund? Are you buying through a company? Like, what's the vehicle that you're buying through? The next part is like, what are you buying for? Are you buying for capital growth? Are you buying for cash flow? Are you looking to piggyback to buy the next investment property as well and scale out your portfolio? So I think for us, you mentioned there, slow down to speed up.
Yeah.
It makes sense to us, but to people that are just like, I just want to keep buying property, it's like, whoa, easy, tiger. Yeah. We've got to get a strategy mapped out that we know when we're doing the lending, we know exactly lender A, then we're going to do lender B, then we're going to lender C, then D, and it gives us the ability to work together in a partnership role with a client to go, we're not just going to get you this loan now, it's going to be, we're future-proofed your strategy as well.
Correct. And, our visions are quite aligned, right?
Yeah, absolutely.
Around, yours is around intergenerational wealth.
Yep.
Mine's around empowering financial legacies for generations.
Yep.
Well, not around, it is empowering financial legacies for generations. We do what we do because we actually care.
Correct.
Right? And when we talk about the big picture, we do, if we're slowing you down, it's for a reason. We want to see you win.
Absolutely.
And I believe everyone can win.
Oh, mate, I think you'll only rise to the level of the caliber of your team. Yeah. I'll say this a lot. People that are entrusting professionals that haven't either done it for themselves or done it for clients, for example, they will fall short. You only fall to that level of like the depth and breadth in your team. So you keep looking for the right partners. This is not self-serving or self-seeking advice. All we're trying to say is find the right partners, get the right strategy, then pull the trigger with confidence.
Yeah, 100%. So, I'm going to throw it to you now. It's all things technology, right? It's revolutionizing our industry, okay? How do you see advancements like AI and a bit of automation in the background helping clients get quicker loan approvals, which actually will have the impact on their ability to secure the right financial products?
Look, it's really early days for AI, as much as there's been a lot happening over the last sort of 10 and 20 years. In our space, where AI is really helping is that because we have a lot of data to assess, whether that's financials or customer spending or their history, valuations on property, there's so much really rich data that we can use. AI is really helping to condense the time it takes to look at that data, take that data and put it into really good information so that we can make the process more efficient. but because it's still relatively early days, we have to take a very cautious approach to how we do it, and that's why we've still got the human interaction side of things to make sure that we're doing it safely and we're solving really complex problems.
Yeah, and I totally agree with you on the human interaction. You did talk about the human interaction yesterday and really understanding your clients and asking more questions and really being part of their world, which actually resonated with me quite well. So I don't feel the human interaction, so don't worry everyone out there, we're not going anywhere, you're still going to be able to talk to us. I won't turn into a robot, I hope. Cool, well, we all know banks are really streamlining their process and data collection and credit assessments are going quite streamlined.
Yep.
What role do you think brokers and financial professionals are playing in helping clients make smarter and more strategic decisions during their financial journey?
Yeah, I think with the advent of all the technology and not all of it's AI, but just good tech sometimes, is that it's making that process, I said, more streamlined. It's easier for the client to get that information. It's easier for us to access that information. And at the heart of that, what it means is that you're spending more quality time working with a client on debt structure and strategy than we are sort of pushing paperwork around or asking for documentation. So we're getting to spend time with the client where it's most valuable, which is your experience, whether that's 10 or 20 years working with SME clients or it's doing self-managed super funds or helping first home buyers. Where our passion is giving the advice side of things. It's actually really not great use of our time to be chasing around paperwork, and it's not really great use of the client's time. So the ability for tech to help in that area lets us help or helps us spend more time with the client, which is fantastic.
Yeah, and that's it, just building the relationships, right? Because that's what we love doing, and we love helping them achieve their milestones and financial legacies, right?